Welcome to Hibiscus Petroleum's Financial Results Webcast. This webcast presents an overview of the results reported as part of our quarterly financial report for the 3-month period ended 30th June 2022 and released earlier today. This webcast has been prepared by Hibiscus Petroleum Berhad, or the company, solely for general information purposes and shall at all times be heard and or viewed together with the full quarterly report for the same period that has been made available or published by the company on its website. This webcast may contain forward-looking statements which are based on current expectations, beliefs and projections about future events or matters. By listening to and or viewing the webcast, you agree to the limitations and notifications set out in the disclaimer section of this webcast. Our presentation today is split into 4 parts. Part 1 of our presentation presents our key messages and highlights of this quarter, which will be presented by Pascal Hoss, CEO of Hibiscus Oil and Gas Malaysia Limited, a wholly owned subsidiary of the group. Part 2 covers the group's quarterly financial highlights, which will be presented by Yip Chi Yong, or CY, our Chief Financial Officer. The group's operational highlights, offtake schedule, and reserves and resources update will be presented by Deepak Thakur, our VP of Economics and Business Planning. Part 3 of our presentation provides a brief outlook on the oil market, which will be presented by Lily Ling, our Senior General Manager of Corporate Development. Part 4 covers the group's financial results, which will be presented again by CY. Should you have any queries, you may contact our Investor Relations team headed by Lily Ling via the email address provided at the end of this presentation. Now over to Pascal.
Hello, I am Pascal Hoss, CEO of Hibiscus Oil and Gas Malaysia Limited, and here are our key messages for the current quarter. This current quarter saw the group's recently acquired assets contributing to its first full operating quarter from a financial results perspective, and our growing portfolio meeting expectations as reflected in our operational results. In the current quarter, we sold approximately 1.4 million barrels of oil and condensate. Gas was also sold, which amounted to 590,000 barrels of oil equivalent. With the delivery of these volumes, we achieved our target for the financial year ended 30th June 2022, having sold a total of 4.6 million barrels of oil equivalent of oil, condensate, and gas. Of this 4.6 million barrels of oil equivalent, 3.5 million barrels comprised oil and condensate, with gas making up the remaining 1.1 million barrels of oil equivalent. In the previous financial year, 3.7 million barrels of oil was sold. The recently acquired assets have also resulted in daily production rates having increased to approximately 20,000 barrels of oil equivalent per day. Going forward, the group's target for the 2023 financial year is to sell approximately 7.2 to 7.5 million barrels of oil equivalent of oil, condensate, and gas, comprising of 4.4 to 4.7 million barrels of oil and condensate, with gas contributing a further 2.8 million barrels of oil equivalent. Our financial performance in the current quarter has been positively affected by smooth operational performance combined with strong oil and gas prices, as well as being boosted by the contribution of the recently acquired assets for a full quarter. In the current quarter, we delivered earnings before interest, taxes, depreciation, and amortization, or EBITDA, of 433.7 million ringgit and a profit after taxation, or PAT, of 215.5 million ringgit, where the recently acquired assets contributed 199.9 million ringgit and 120.2 million ringgit to the group's EBITDA and PAT, respectively. Further, for the financial year ended 30th June 2022, we delivered an EBITDA of 1.13 billion ringgit and a PAT of 613 million ringgit. In line with our energy transition strategy, the recently acquired assets have drawn us closer to our goal of growing our production and reserves through increasing our gas assets. We will also be looking to further increase our disclosures on emissions for greater transparency and visibility so that investors will be able to track the progress we are making in this important area. We also intend to remain a constituent in the FTSE4Good Bursa Malaysia Index. We continue to remain focused on optimizing our operational performance whilst managing risk and ensuring safety remains our top priority. An important milestone to be pursued and delivered over the first quarter of financial year 2023 is the reinstatement of the failed riser on the Anasaria cluster. This item malfunctioned in May 2021, and with its reinstatement, we hope to see an improved business performance in the UK going forward. Additionally, we continue to work tirelessly to amicably resolve issues pertaining to the Sabah state sales tax. Overall, we are pleased with the progress and performance of the group. That's all from me. Now on to CY with the main financial updates.
Hi, I'm CY, Hibiscus Petroleum Group's Chief Financial Officer. I'll take you through an overview of the financial highlights for the current quarter. Hibiscus Petroleum completed the acquisition of the entire equity interest in Fortuna International Petroleum Corporation, or FIPC, from the Repsol Group on 24th January 2022. FIPC, through its wholly owned subsidiaries, owns operated participating interest in 5 production sharing contracts, namely the 2012 Kinabalu Oil PSC, the PM3 CAA PSC, the PM305 PSC, the PM314 PSC, and the Block 46 PSC Kainok. Our group has assumed Repsol's operatorship in all these 5 PSCs. The contribution of these new PSCs, which are reported for a full 3 months in the current quarter for the first time since the completion of the acquisition, has significantly boosted the group's current quarter's financial numbers. The group recorded a revenue of 868.4 million ringgit for the current quarter, representing the highest revenue recorded by the group in a single quarter. The FIPC group contributed to half of this amount, at 444.5 million ringgit. During the current quarter, out of the group's total EBITDA of 433.7 million ringgit, the recently acquired assets contributed 199.9 million ringgit, or 46% of total EBITDA. These assets also contributed 120.2 million ringgit to the PAT of the current quarter, or 56% of total PAT. Strong oil and gas prices which were realized contributed positively to the profitability levels in all the group's producing assets, including both North Sabah and the Anasurya cluster. Average realized oil prices across the group increased by 18% in this current quarter to $120 per barrel, compared to $102 realized on average per barrel in the previous quarter. The group's revenue in the current quarter almost tripled that recognized in the previous quarter, as a result of a full quarter contribution from our recently acquired assets, higher realized oil prices achieved across all assets, and higher volumes sold by the North Sabah asset. Excluding the impact arising from the negative goodwill of 317.3 million ringgit recognized upon the acquisition of FIPC in the previous quarter, and the provisions for impairment of the Australian assets in both quarters, the group's EBITDA increased by 167%, whilst our PAT in the current quarter increased by 514% when compared to the previous quarter. As a reminder, the fair value of the recently acquired assets as at 24th January 2022 has been finalized and reviewed in accordance with the provisions of MFRS 3, accounting for business combinations, in the previous quarter. That assessment resulted in a fair value gain, referred to as a negative goodwill from business combination in the financial statements. Overall, we are pleased that the Repsol transaction is delivering enhanced value to our shareholders. In addition to the positive impact of the negative goodwill that has been secured as part of the recently completed transaction, the group has also identified a net 49.9 million ringgit in deferred tax assets relating to the Kinabalu PSC, which have been recognized in the current quarter. Such deferred tax assets were previously derecognized by Repsol based on their previous estimation that the Kinabalu PSC would not generate sufficient future available profits to utilize the related tax losses. The profile of the group's oil and gas portfolio is now dominated by producing assets primarily located in Southeast Asia and to a degree in the United Kingdom. Material, financial and human resources are being applied to these producing assets, which will likely result in less resources being applied towards the Australian assets, and thus we put through certain impairments relating to these assets. As a point of information, subsequent to the impairments taken, the carrying value of the Australian assets as at 30th June 2022 is nil. From a production perspective, the recently acquired assets have met expectations, hence allowing the group to close the 2022 financial year on a strong note. I will now ask Deepak to continue this presentation with the operational highlights.
Hello, I am Deepak Thakur, VP of Economics and Business Planning. This table shows the operational performance of our North Sabah, Anasuria cluster and recently acquired assets for this quarter. Focusing on the current quarter ended 30th of June 2022, the North Sabah production facilities recorded an average uptime of 85%. The uptime is similar to that reported for the preceding quarter due to the planned shutdown arising from the ongoing planned major maintenance campaign for calendar year 2022, which commenced in March 2022 and is expected to complete in September 2022. Average daily net oil production for the current quarter stood at approximately 4,460 barrels with an average OPEX of $27.95 per barrel. Approximately 600,000 barrels of crude oil net to Hibiscus were sold at an average realized price of $119.8 per barrel. This is a price that is higher than that was secured in the previous quarter. In terms of expenditure, cost related to specialized studies, production maintenance, and support services during the current quarter resulted in a capital expenditure of 4.9 million ringgit net to Hibiscus. Over at Anasuria, the average uptime achieved in the current quarter was 61%, whilst the average daily net oil and gas production stood at approximately 1,800 barrels of oil equivalent with an average OPEX of $27.41 per barrel of oil equivalent. Anasuria's operational performance for the current quarter was affected by a planned offshore turnaround of the Anasuria FPSO, which commenced on 17th of June 2022 and was subsequently completed on 17th of July 2022. The 2022 turnaround was conducted with an objective of improving the reliability and integrity of the Anasuria FPSO in addition to ensuring a safe offshore working environment. Anasuria's operational performance continues to be affected by the unavailability of a critical component of the subsea infrastructure which malfunctioned in May 2021. This specific item, a production riser, is a part of the subsea infrastructure which transports crude oil from the subsea wells to the Anasuria FPSO. Until the failed component is replaced and the production riser returns to normal service, we anticipate that daily oil production contributing to offtake volumes and OPEX per barrel of oil equivalent metrics will be affected. Engineering and procurement activities are currently ongoing on a fast-track basis, with execution expected to be concluded in the third quarter of calendar year 2022. In terms of capital expenditure, Anasuria Hibiscus UK incurred approximately 23 million ringgit in the current quarter, primarily for the well intervention program in Gilmore A field and the ongoing riser reinstatement project. On a positive note, the average realized gas price secured for Anasuria gas continues to be strong as a result of gas supply shortages being experienced in Europe as a result of Russia-Ukraine conflict. For our recently acquired assets, the average uptime achieved during the current quarter was 91%, with daily net oil and gas production at approximately 12,400 barrels of oil equivalent, with an average OPEX of $11.22 per barrel of oil equivalent. Over at the Kinabalu asset, we saw an increase of 11% in average gross oil production in current quarter when compared to the previous quarter, with average daily net oil production for the current quarter at approximately 3,200 barrels with an average OPEX of $10.61 per barrel. This was thanks to improved uptime and better well performance that was driven by stable topside operations, well optimization exercises, and relatively high level of compressor reliability, which allowed a constant supply of gas for gas lift activities. In the current quarter, a capital expenditure of 3.4 million ringgit net to Hibiscus Oil and Gas Malaysia Limited was used for minor production maintenance activities and costs related to electrical submersible pump pilot facilities. At PM3CAA, we saw an average uptime of 91% in the current quarter, with average net oil and condensate equivalent production rate of approximately 8,900 barrels of oil equivalent per day, with an OPEX of $11.34 per BOE. Costs related to H4 drilling and project development and production maintenance resulted in a net capital expenditure of 50 million ringgit. This slide presents the latest estimate of the group's crude oil and condensate offtake schedule and gas sales from our producing assets for the first and second quarter for the financial year ending 30th of June 2023. During these periods, we estimate to sell a total of approximately 1.6 million barrel of oil equivalent and 2.6 million barrel of oil equivalent of oil, condensate and gas respectively net to the group. For the financial year ended 30th of June 2022, we sold a total of 4.6 million barrel of oil equivalent comprising oil, condensate and gas net to the group, meeting our target. For the financial year ending 30th of June 2023, the group is targeting to sell a total of approximately 7.2 to 7.5 million barrels of oil equivalent of oil, condensate and gas, comprising 4.4 to 4.7 million barrel of oil and condensate and 2.8 million barrel of oil equivalent of gas. Moving on to the following slide. The chart on this slide depicts our updated net oil and gas reserves and resources as at 1st July 2022 across our assets, inclusive of the recently acquired assets. As of 1st July 2022, our total net proven and probable or 2P reserves stood at 72.3 million barrel of oil equivalent, whilst net 2C contingent oil resources stood at 70.2 million barrels. I will now ask Lily to continue with this presentation.
Hello, I'm Lily Ling, Senior General Manager of Corporate Development at Hibiscus Petroleum. Moving on to part 3 of our presentation today, I will now provide a brief outlook on the oil market. This chart from Rystad Energy shows the outlook for liquid balances resulting in builds towards the end of the year caused by recession fears, lower GDP expectations, and lingering COVID-19 impacts. According to their analysts, oil demand for 2022 is estimated to rise by 2.1 million barrels per day year-on-year to settle at 100 million barrels per day, just short of pre-pandemic highs. Rystad sees potential upside of 700,000 barrels per day in oil demand during the winter months as expensive natural gas prices may prompt gas to oil switching. In terms of balances, Rystad finds that strong growth will resume in 2023, especially in the second half, reaching 3.3 million barrels per day year-on-year with a bounce back in economic activity and the expectation that global aviation demand will eventually return to pre-pandemic levels. This chart shows Rystad Energy's oil price outlook under their base bull and bear cases. Brent oil prices have hit levels above $120 per barrel at certain points in the current quarter. These prices have not been seen in close to 10 years that are presently being achieved due to structural supply issues, limited refinery capacity, and increasing demand as the world opens up their economies. In addition, this has been further exacerbated by the Russian invasion of Ukraine and the subsequent sanctions placed on them. According to Rystad's analysts, base case Brent prices are expected to remain in the range of $95 to $110 per barrel into 2023. Rystad's analyst bull case is based on the assumption that recession fears remain unrealized, and Russia follows through on its threats to cut natural gas supply to Europe, driving up gas demand and Brent prices if users switch from gas to oil. For their bear case, Rystad's analyst assumes a severe drop in oil consumption affecting oil prices as demand drops, which could be attributed to China's continuing lockdowns, amongst other assumptions. I will now hand over back to CY, who will go over the financial highlights.
Hello again. As often reiterated in the past, we practice careful management of costs and the efficient delivery of production enhancement projects. This continues to be part of our strategy of maintaining a low unit production cost structure in our producing assets. We also time the implementation of maintenance activities to ensure that positive cash flow is consistently delivered. The group operates or jointly operates its main producing assets, which is a key enabler in allowing us to influence the timing of implementation activities, aiding our ability to manage the phasing of expenditure. The charts on this slide show the quarterly average realized oil price, unit production costs, and EBITDA margins for both the Anasura cluster and North Sabah over the last 10 quarters. For the recently acquired assets in the FIPC group, the chart shows the weighted average realized price of both oil and condensate offtakes and gas sales, unit production costs, and EBITDA margin over the last 2 quarters. It should be noted that EBITDA margin for these recently acquired assets in the third quarter of financial year 2022 have been adjusted to exclude the negative goodwill of 317 million ringgit. The contribution of these recently acquired assets to the group's financial performance for a full quarter are reported for the first time in the current quarter. In the current quarter, the recently acquired assets contributed 51% to the group's revenue, 46% to the group's EBITDA, and 56% to the group's PAT. As shown in the charts, the average unit production costs for the Anasura cluster, North Sabah, and the recently acquired assets are all well below the average realized oil price achieved in the respective quarters, delivering sustained positive cash flows. Management's focus remains on continuing this trend of overall performance. The group's financial performance and profitability in the current quarter was strong on the back of high oil, condensate, and gas prices. As previously mentioned, EBITDA attained during the current quarter amounted to 433.7 million ringgit, while the PAT was at 215.5 million ringgit. In the current quarter, the group sold approximately 1.4 million barrels of crude oil and gas equivalent to 590,000 barrels of oil equivalent. As also previously mentioned, this quarter represents the first full quarter in which contribution from the recently acquired FIPC Group's operations were included in the group's financial statements. The impact from these recently acquired assets is significant. The 2012 Kinabalu Oil PSC, the PM3 CAA PSC, the PM305 PSC, the PM314 PSC, and the Block 46 PSC Kainok collectively contributed 51% to the group's revenue, 46% to the group's EBITDA, and 56% to the group's PAT. Oil revenue and gas revenue from the PM3 CAA PSC achieved in the current quarter were 142 million ringgit and 117 million ringgit respectively. EBITDA and EBITDA margin for PM3 CAA in the current quarter was 187.4 million ringgit and 72.2% respectively. The high EBITDA margin was driven by the high average selling prices realized for the sale of both crude oil and gas. PM3 CAA sold 293,000 barrels of oil and condensate net to our group, which was sold at an average oil price of $113.99 per barrel. The Kinabalu PSC sold 361,000 barrels of crude oil net to our group at a high average oil price of $121.15 per barrel. Profit margins for Kinabalu in the current quarter were adversely impacted by the accounting treatment of the crude oil inventory balance of 92,000 barrels acquired from Repsol on 24th January 2022. This opening inventory balance was valued at fair value at the prevailing crude oil price at each reporting cycle per the treatment previously adopted by Repsol. The crude oil offtake that took place in May 2022 was the first offtake undertaken by Kinabalu since it was acquired by Hibiscus Petroleum. The cost of the 92,000 barrels inventory balance included in the cost of sales for this offtake was higher than would have been the case had the weighted average cost been used, by approximately 45 million ringgit. As stated in Note 2 of the slide, excluding this one-off higher cost of sales would result in a normalized EBITDA and EBITDA margin of 65.6 million ringgit and 36.5% respectively. The normalized results before taxation for the Kinabalu PSC would be a profit before taxation or PBT of 34.8 million ringgit instead of the reported loss before taxation of 10.2 million ringgit. The normalized PBT margin would be 19.4%. Moving on to the North Sabah assets, these assets sold 612,000 barrels of crude oil net to Sea Hibiscus. These barrels were sold at an average oil price of $119.80 per barrel. The relatively high average realized oil price achieved, coupled with careful management of costs and efficient operational performance, resulting in an EBITDA margin attained in the current quarter of 49.2% for North Sabah. From the United Kingdom segment, a net 163,000 barrels was sold from the Anasura cluster at $127.91 per barrel. In addition, gas sales delivered a revenue of 15.2 million ringgit. Gross profit from the Anasura cluster amounted to 86.5 million ringgit, whilst EBITDA realized amounted to 85.6 million ringgit. That's all from me today. Back to you, Andrew.
Thank you, CY. And that is all we have for this quarter's earnings webcast. Thank you for tuning in.